fellow South Africans, I'm addressing you this evening.
All your years of paying tax, you helped us overcome our darkest hour. You, along with every other loyal taxpayer, helped build this nation. Thank you for every life you saved and for every risk you braved, for giving our future generation a healthy start. When you saw many of our vulnerable communities, you provided for them. When you saw our healthcare workers on the front lines battling COVID, you rose to the occasion and gave them the tools to save lives. Without your tax compliance, we wouldn't be able to fight a good fight. Thank you for contributing to the important services our vulnerable communities rely on every day. To all taxpayers and traders, continue to pay your tax because it matters to millions of South Africans who depend on it. Your tax matters.
Good evening, ladies and gentlemen, and welcome to our webinar on Tax Exemption Section 18A. My name is Mashadi Mutwa. I'm the lead in Tax Verification Northwest. It is a privilege for me to be coordinating this webinar tonight with you. And I'd like to thank you for taking out your time to join us tonight in this webinar. I hope all your uncertainty and questions will be answered tonight, and all will be able to meet your expectations. Before we start the webinar tonight, please note the following. As you exit the webinar tonight, you will be prompted to answer a survey. Please ask as much as possible, complete the survey as much as possible. We really appreciate hearing from you. As SARS, we are committed to making changes through our stakeholders. Post all your questions on our Q&A pod and send us the emails on Section 18A questions@sars.gov.za. Due to POPI Act, please do not post your personal information, like your ID, your tax numbers. If you are attending through our YouTube channel, note that you will not be able to post questions on our Q&A pod. Only those who registered through our Zoom channel will be able to do so. We'll answer as much questions as possible. But if we don't get to your questions, please do not be discouraged. All questions will be posted on our website on the frequent asked questions. If it happens that you experience load shedding during this webinar, the recording of this webinar will be posted on our SARS website. All frequent asked questions as well will be posted on our website. Before we continue with the webinar, we've got a keynote speaker who will be telling us the foundation of what is it about the tax exemption section 18A, the changes that happen and where we are going, and all the requirements that you need to do. Actually, he will just be giving us an insight on the topic of the webinar tonight. We've got Ms. Hendricks, who will be giving us the keynote speaker. Ms. Hendricks has been with SARS for 23 years, the last 3 years of which she has spent as a segment head for tax exemption institution. Prior to SARS, she was a constitutional planner with Department of Constitutional Development and was involved in several policy development areas, including finalizing of draft constitution and the local government white paper process. Since joining SARS in 1999, Ms. Hendricks has occupied several management roles, such as heading up SARS Corporate Secretary and be seconded to the Ministry of Finance. She has also been an executive responsible for public, private sector stakeholder relation division. Ms. Hendricks was also the executive responsible for tax exemption unit for the period of 5 years. Ms. Hendricks holds a BA honors in politics, postgraduate diploma in management practice, diploma in public sector governance and project management, a certificate in internal government fiscal relation. Ms. Hendricks, over to you.
Thank you, Madam Program Director. Good evening, ladies and gentlemen. On behalf of the SARS management and the team, we welcome you this evening. Ladies and gentlemen, esteemed participants and honored guests, I'm delighted to welcome you to the SARS Education webinar on tax-deductible receipts, or so-called Section 18A receipts. It is indeed a privilege to have each one of you join us this evening as we embark on a journey of knowledge sharing and empowerment. Taxation, as you are all aware, plays an essential role in the development and growth of any nation, and the commitment of taxpayers like yourselves contributes significantly to the prosperity of our country. Tonight, however, is a special occasion as we get to share this platform with esteemed participants that are at the forefront of promoting the social and economic well-being of our citizens. To our colleagues, thank you for choosing such an apt introduction to this evening's session. The participants joining us are indeed the individuals and organizations that helps others in their darkest hour, and vulnerable communities rely on them. Madam Program Director, the webinar stands as a testament to our collective dedication to understanding our tax responsibilities in respect of tax-deductible donations, but more importantly, to enhancing our understanding of our rights, our privileges, and obligations. To our audience members, this webinar is for you if you are an organization that has been approved to issue Section 18A receipts, if you are a donor that makes donations to Section 18A organizations, to those organizations that still need to obtain their Section 18A status, please feel free to listen in. But we will be covering the application process in another session. So the world of taxation can be daunting, and the area of income tax exemption can become a legal minefield to all of us. The intricacies may pose challenges and questions to individuals and entities, and even to some of the colleagues that are on the line tonight. The aim of this webinar is to demystify some of these complexities and provide you with the tools and insights necessary to navigate the special Section 18A status attached to your entity. We will focus on a high-level overview of Section 18A approvals and legislative requirements. What is a qualifying and a non-qualifying donation? How do you ensure continued compliance requirements? And what should our donors know that give so generously? And unfortunately, the consequences of non-compliance. It's not just about the who issues the receipt, but also about the what, the manner in which the donation was made, what the donation was made for, and so many other areas. As I've mentioned before, it is a privilege to have members of civil society joining us this evening. We appreciate that many of you are volunteers and you have to do so much with so little. We do appreciate your time. As we know, civil society plays a significant role in, not just in South Africa, but in many societies. You have a shared responsibility with government for social and development needs of the country. You help the most vulnerable in society. You are the voice for the most vulnerable in society. And yes, there may be some of you who are asking, what is the Section 18A that we are referring to, or what are tax-deductible donations? In many countries, including South Africa, tax incentives are provided to encourage donations to registered public benefit organizations and other entities. This tax incentive is set out in Section 18A of the Income Tax Act, and hence our referral to Section 18A. It allows individuals and businesses to claim tax deductions for certain donations made to eligible PBOs. In short, this is one area in taxation where we don't just collect money, but we also give money away. And the organizations approved to issue Section 18A receipts are the ones that issue the receipt that will enable taxpayers to claim a deduction from their taxable income. And for SARS, to not always just collect, but to then also hand out money. The community represented here this evening is large and diversified. As I said, we have volunteers that give time to their community organizations. We have professional advisors. There are organizations that may issue 3 to 4 receipts a year. And yes, we also have organizations that issue in excess of 1 million receipts a year. But for the most part, our organizations issue between 100 to 300 receipts a year. So, ladies and gentlemen, I encourage you to actively engage with our speakers, ask questions, and participate in the discussion. The more engaged you are, the more enriching this experience will be. Remember, this is not just a one-way street. Your insights, your questions, and your perspectives are invaluable to all of us. Even if we don't answer them tonight, it will help us formulate future messages. Before I conclude, I want to express my gratitude to our distinguished panel of experts who have generously devoted their time and expertise to making this event possible. Their dedication to sharing knowledge reflects their commitment to fostering a well-informed community of taxpayers. At SARS, we believe that an informed taxpayer is so much more likely to be a compliant taxpayer. Also, a big thank you to the team that has been working tirelessly behind the scenes and that are supporting us so well this evening. Lastly, I want to thank and express my gratitude to all of you responsible taxpayers of South Africa. Your presence here is reflective not only of your willingness to learn and understand, but also of your willingness to be compliant, responsible citizens of South Africa. Let us seize this opportunity to enhance our understanding, strengthen our financial acumen, and forge ahead with confidence as the responsible citizens of this country, who together we can build a brighter future for ourselves and our nation. Thank you, and I wish you all a productive and enlightened webinar. Madam Program Director, I will hand back to you.
Thank you, Ms. Hendricks, for a wonderful welcome to all of us, our stakeholders, our colleagues. Indeed, tax exemption is an important part for proper administration. And indeed, it will be informed of you as a stakeholder to be part of us tonight so that we assist you and support you to become compliant. Our program tonight will be divided into 2. We have a tax expert who will be doing a presentation for us, and we have a Q&A session that will be hosted. And the Q&A session, they will be answering all your questions that have been sent through our email address. Section 18A, questions@sars.gov.za. If you experience any load shedding during this webinar, note that the recording of this webinar will be posted on our SARS YouTube channel. All questions and the presentation will be posted on our website. We've got Lucky, who will be doing our presentation tonight. Lucky began his career with SARS in 2012 as a graduate trainee in the audit division. He later worked as an analyst in the tax exemption unit. When he joined the Office of the Tax Ombud as an operational specialist, complaint resolution, Lucky returned to SARS as a specialist strategy advisory in the estate segment in 2022. Since July 2023, he has been seconded to the tax exemption segment, where he contributes his expertise and knowledge to the FATF project stream. segment research and operational improvements. Lucky holds an MCOM from WITS, a Masters of Public Administration from University of Pretoria, and a Masters of Arts Applied Ethics for Professionals from WITS University. Lucky, over to you.
Thank you so much, Program Director. And welcome to all our participants today, colleagues, and all the stakeholders involved today. Basic housekeeping rules have been laid out already by the Program Director, and a welcome note has been done by our segment lead. So I'll dive straight into our presentation today. As alluded earlier on, the focus of today's presentation is on basic principles of Section 18A approved tax-exempt institution. So today, I'll touch on the high-level overview of Section 18A approvals, Section 18A qualifying and non-qualifying donations, management and administration of Section 18A approvals, responsibilities of donors, consequences for non-compliance, and concluding remarks. So just to give a high-level overview of Section 18A approval. What are Section 18A tax deductible receipt? Well, Section 18A tax deductible receipt is an official document issued by an approved institution, Section 18A approved institution, to a donor who makes a qualifying donation. It also serves as a proof that a qualifying donation has been made, and this can potentially enable the donor to claim a tax deduction from their taxable income on submission of their annual income tax return. Now, how do I qualify for Section 18A status, and what are the conditions? Well, to issue a Section 18A receipt, an organization must be approved by the South African Revenue Services for the purposes of Section 18A of the Income Tax Act. And most importantly, this status may only be granted by the South African Revenue Services. The donation made for which this receipt will be issued can be made by individuals or businesses and may be in cash or donations in kind, and may not have any conditions attached or personal benefit to the donor. So what's the importance of Section 18A receipt? Well, there's two parts to this. For donors, obtaining a Section 18A tax deductible receipt potentially enables them to reduce their taxable income when submitting their annual tax returns. And this also incentivizes charitable giving and encourages greater support for worthy causes. For Section 18A approved institution, issuing these receipts can enhance transparency, build trust with donors, and promote their fundraising efforts. Now, how do I qualify, or how do I apply for Section 18A approval? So now, before you apply for Section 18A approval, SARS requires that a legal entity be formed. And this legal entity can be in different forms. It can be an NPC, which is registered with the CIPC. It can be a trust, which is registered with the Master of High Court, or a voluntary association, which is an association of people who comes together to form an association for a common purpose and draft a constitution which will guide and govern their conduct. Once signed, this constitution becomes legally binding and an organization has been formed. Other forms of legal entities include institutions, bodies, or boards established under or by law, specific United Nations entities, and any departments of government. Now, once a legal entity has been formed, the entity can come forward to SARS and register for income tax. It must be noted that for NPC, once you register as an entity, as a legal entity with NPC, an income tax number is automatically issued. However, even in that case, you still need to approach SARS to come and update some of the important information that might not have been made available to the CIPC. So once an organization has been registered for tax or has been issued with a tax number, then SARS proceeds to assess the organization for income tax exemption. Now, to assess whether an organization is eligible for for income tax exemption. An organization must be conducting one or more of the activities listed under Part 1 of the 9th Schedule of the Income Tax Act. Once an organization passes that stage, SARS then proceeds to evaluate the application for Section 18A. And for an organization to qualify for Section 18A approval, it must conduct one or more activities listed under Part 2 of the 9th Schedule of the Income Tax Act. And you will notice that Part 2 of the 9th Schedule has got fewer categories as well as public benefit activities than Part 1 of the 9th Schedule. This is due to the fact that Section 18A has got very strict and very specific rules that must be complied with before an organization can qualify for Section 18A status. And not all exempt organizations will qualify for this Section 18A status. It must also be noted that all these three steps that I have indicated, registration for Income Tax Act, application for income tax exemption, and application for Section 18A approval, may be done simultaneously using one application form and submitting one set of supporting documents. But however, one stage needs to be completed and the taxpayer needs to qualify for one stage before SARS can move to a different stage, even though one application has been submitted. So we have different categories of Section 18A approval. We have approval under Section 18A 1A, which is for doers. Now, these are organizations which are actively involved in conducting on a daily basis qualifying public benefit activities. We have Section 18A 1B, which is for conduits or funders. So now these are organizations which provide funds or assets to other approved exempt entities conducting qualifying PBAs. And this funding is only limited to the provision of funds or asset and does not include any provision of services or any other resources. We also have approval under both Section 18A 1A and B. So now this is for organizations which conduct both activities, which is a doer and conduit. So now such an organization will have approval under both subsections. We also have an approval under Section 18 1C, which is for various spheres of government that are approved and conduct qualifying public benefit activities. We have Section 18A 1BA, which is for specialized UN agencies that are approved and conduct qualifying PBAs. We also have ring-fenced Section 18A status. So now this is for those activities which carries on dual activities. Those are activities which are listed under Part 1 and under Part 2 of the 9th Schedule of the Income Tax Act. And due to the complexity of this approval and the complexity of monitoring and managing it, additional reporting requirements will be required from the organization approved under ring-fenced Section 18A status. I've been talking about qualifying public benefit activities, and one might ask, what are those? So as I've said earlier, they are found under the second Part 2 of the 9th Schedule of the Income Tax Act, and they are found in 5 main categories, which has subcategories or individual activities under each. However, the provision of funds and assets by a conduit PBA will not be found under the Part 2 of the 9th Schedule. It is an activity which has been provided for under Section 18A of the Income Tax Act. So it's in addition to the activities listed under Part 2 of the 9th Schedule. If you want to read more or explore more on sub-activities under these main activities, you may consult the various documents that we have, including but not limited to our application form or the Income Tax Act or the guide on the SARS website. So what are Section 18A qualifying and non-qualifying donations? In the context of the South African income tax law, Section 18A donation refers to donation made to a specific public benefit organization or entity that is eligible to issue Section 18A tax deductible receipt. So that means an approved organization. This receipt enables donors to claim tax deductions on their contribution in their income tax return. And there are different types of Section 18A donations based on their nature of contribution and how they qualify for the tax benefit. And to qualify as a valid or bona fide donation, a donor must make a donation from the goodness of their heart and out of their generosity without any expectation from the receiving organization. So there must not be any reciprocal obligation on the part of the receiving organization, and there must not be any personal benefit attached to this donation for the donor. We have different types of qualifying donation. We have cash donations. These are most commonly used types of donation. These include monetary contribution, normally made by individuals or businesses directly to registered PBOs. And then a PBO will issue a Section 18A tax deductible receipt for the donation amount. And most importantly, it must be the exact donated amount, which the donor can use to claim a tax deduction on their income tax return. We have in-kind donations. So these are non-cash contributions, such as goods, assets, or any other equipment provided to a registered PBO. This can include food, clothing, and equipment offered to support the organization's charitable activities. And when property valued and verified, in-kind donation can qualify for Section 18A tax deduction. And the PBO issuing a receipt will issue a receipt based on the estimated value of that donated item. Due to the difficulties in valuing this in-kind donation, we will delve deeper into how these kinds of donations are evaluated later in the presentation. We also have payroll giving. So this is also known as workplace giving, wherein employees can contribute a certain portion of their income or salaries through their employer, who will collect all the contributions and make one donation to a specified or chosen PBO of their employees' behalf. If the PBO is eligible to issue Section 18A tax deductible receipt, employees can claim this deduction for their contribution made to that particular organization. The Section 18A approved institution will issue a Section 18A tax deductible receipt directly to the employer, and the employer must take these donations into account when determining the monthly employee's tax to be deducted from the employee's remuneration. So this portion of your deduction will normally appear on your RRP5 and be reported directly by your employer. So now, how do we value in-kind donations? We have quite a few examples. The first one is immovable property, such as a building. The amount to be placed on an 18A receipt for the donation of an immovable property should be the lowest of the fair market value of that property on the date of donation, or the cost of such property, less any allowances deducted from the income of that taxpayer for that asset. The second one is financial instrument, such as shares in a listed company. The amount should be the lower of the fair market value on the date of donation or the cost of acquisition of these shares to the donor. Trading stock, and this may include foods, furniture, medical supplies, or motor vehicles. The cost that will be placed on the receipt should be the cost of the trading stock. However, it should be noted that if any of this item cannot be allocated or quantified in monetary value, no 18A receipt may be issued. What do I mean by that? If food, for instance, is about to expire or has already expired and it is donated to an organization, such item or such food may not be allocated any monetary value, as it is of no value to anyone. So no 18A receipt may be issued for such expired or goods which are about to expire, as the owner would have otherwise disposed them in a different manner, which is to dump them or to destroy them. Assets used in trading, normally given by companies such as computers, vehicle, or any other equipment. The value will be the lower of the fair market value on the date of the donation or the cost of such property less any allowances deducted from the income of the taxpayer for that particular asset. Lastly, we have personal assets, which are normally given by individuals, and they include furniture, computer, or sports equipment. So the value will be the lower of the fair market value on the date of the donation or the cost to the taxpayer of such asset, less the depreciation using the 20% reducing balance method. So what we consider as non-qualifying donations. Donations of services rendered, such as professional personnel, person rendering a service or skill free of charge. These include doctors, psychologists, or any other professional person rendering a service or a professional service to an organization. An amount paid for attending any fundraising dinner, dance, or a charity golf day, or any other entertainment or hospitality amount paid towards such a function. Any amount paid for the successful bid of goods auctioned to raise funds by an institution, memorabilia, paintings, or any related items donated to be auctioned to raise funds. Any amount paid towards a raffle ticket or a lottery ticket, as these amounts normally have a benefit attached to them, even though such benefit is not guaranteed to everyone. They may not be claimed as 18A donations. Any amount paid for school fees, entrance fees for school admittance, or any compulsory school levies, or any other extramural activity or service that is provided by the school to your child for that particular amount may not be issued with an 18A receipt, unless if a parent from the goodness of their heart gives a bona fide donation to the school without any service exchanged to them or any benefit given to their child. The value of free rent, water, and electricity provided by a property owner to a lessee, which is an approved PBO, or payment in respect of debt due. So now, how do we manage and administer Section 18A approval? So management of Section 18A approval or status includes various aspects. Number one, which is that an organization approved for Section 18A or an organization holding the status must ensure that all legal requirements are met when issuing a receipt. So this includes understanding the type of Section 18A approval and different legal requirements for each. This is normally placed on your approval letter and will be clearly stated there. The recipient PBO must also use the funds or asset for which the 18A receipts have been issued to carry on any Section 18A activities in South Africa. So no Section 18A donation may be transferred or used out of the borders of the Republic. The qualifying organization must ensure that proper record keeping and account are kept. So this involves issuing a receipt that meets all the required legal requirements, keeping full and proper records relating to any Section 18A receipt issued together with the donation receipts received for such receipts. This information is normally required by law to be kept for a period of 5 years from the date of the submission of the income tax return for the year of the assessment to which it relates. And it must be noted that this 5-year period cannot kickstart for as long as an income tax return has not been submitted. Even though the due date for such a return has passed, it will only kickstart once the income tax return for such an assessment or a year of assessment has been submitted. The organization must also ensure proper reporting of Section 18A, a requirement. So the reporting must meet the existing legal requirements, which will also be found on your approval letter. And you must know that SARS may request the information relating to any 18A receipt issued for a particular year of assessment at any time, including preceding or existing years. And the organization approved for Section 18A must also be prepared to meet new automated reporting requirements, which will be explained later during the presentation. Changes of registered details are also important in the management and administering of 18A status. It is the responsibility of an organization to inform SARS of any changes of their details within a period of 21 business days from the date of any changes. And these changes include changes made to the organization's founding document, its office bearers, board members, fiduciary officers, registered representative, and any other important information relating to the organization. An organization holding an 18A status must ensure that it complies with the requirements of Section 30 at all times, as this will ensure that they retain their 18A status. They must also ensure that proper record keeping is made, as supporting documents must be submitted to SARS within a period of 21 working days, as and when they are requested for any other purposes, including but not limited to audit and verification purposes. And these supporting documents may include but not limited to audit certificate where applicable, if requested by SARS. Any person accepting fiduciary responsibilities for an organization is responsible to ensure that there is proper management, administration, and compliance by the organization. And any person who willfully or without cause fail to neglect or retain a requirement or fail to adhere to any of their legal obligation will be found guilty of a criminal offense and will be convicted. And this conviction is subject to a fine or imprisonment for a period not exceeding 2 years. And an organization cannot be imprisoned, so someone must be taken in. Most importantly, in the disclosure requirements of any public benefit organization, and not only those who hold the 18A, Section 18A status, is the submission of the annual income tax return. The annual tax return must be submitted by all PBOs or all exempt institutions, even though the final result of these returns may be of no tax liability to the organization. You must also be aware that no incomplete or blank income tax return will be accepted by SARS. If for some reason an organization was not operating in a particular year of assessment, a declaration must still be made. And this can be made by selecting yes or no to the question that will be posed on the income tax return. And that question is, I quote, "Is the institution dormant?" Close quote. You must select either yes or no on the relevant section of the income tax return. If yes has been selected, the organization must further select an appropriate answer to the question, does the institution have any asset and or reserves, as you have to account for any asset or reserves in an organization, even though it was not operational in a particular year of assessment. Note that any declaration made on the return is legally binding, and SARS may audit it at any time, including any 18A related information. Most importantly, when it comes to income tax return, taxpayers or organizations must note the relevant date for submission. For companies and association of persons, the submission date will be as per the financial year end date of such an organization. However, for trust, it will be as per the filing season, the normal SARS filing season deadlines. Now, the tax exemption income tax declaration has got a section that deals with 18A declarations. So on this particular section, you will note that there is a section that requires an organization to state a number of 18A receipts issued in a particular year of assessment. And this 20 stated here represent the actual number of individual receipts issued by an organization in a particular year of assessment. And the 50,000 on the other side represent the actual total value of all the 18A tax deductible receipt combined. So this is the tax, the total rent value of the tax deductible receipt, and not one receipt. And the 20 is a number of all the receipts issued in a particular year of assessment. Where an organization has expanded this 18A or any of their donation on both Section 18A approved and non-Section 18 approved activities, a declaration must be made on the relevant section. And this is made by selecting yes or no to the relevant question. An organization which has been approved under Section 18A1B as a funder or conduit must further state whether 50% of their donation received in that particular year of assessment was distributed to other organizations as required by law in that particular year of assessment. And this is done by selecting either yes or no on the relevant section. And that organization must further declare or state whether they are in possession of an audit certificate by stating yes or no to the relevant question. We normally get questions on what is the acceptable standard or format of an example of an 18A receipt. To answer that question, SARS does not have any standard format or template for 18A receipt. However, there are certain requirements that a valid 18A receipt must meet. And here on the screen is a copy or an example of a valid 18A receipt that takes into consideration the enhanced reporting requirements implemented by SARS. Some of you might be aware of this document as it was earlier communicated to most of our stakeholders. And if not, you may make a request after this webinar and we will provide you with an example. However, you must know that this is not a standard format, but it can be used as a guideline to develop or design your own receipt. SARS has introduced enhanced reporting requirements. So one might ask, what's the benefit for this enhanced requirement? So number one, they assure accuracy. They will ensure that donor taxpayers claim a deduction for donation made only to entities which are approved by SARS for purposes of 18A. It also makes things easy. It will ensure that all 18A receipts claimed by donors are matched or accurately matched with information provided by PBOs issuing such receipts. So your donors will not be taken up and down and be subjected to audits and verifications unnecessarily. It also serves as a mitigating factor to guard against the abuse of Section 18A status or PBO numbers, which we normally advertise or which are normally advertised by organizations or when they are doing their donation campaigns or fundraising campaigns or even on their website. So this enhancement or enhanced reporting requirements are very beneficial to both SARS, to both SARS, the taxpayer, and also the donor. What are responsibilities for donors, one might ask? So there are several responsibilities that donors are charged with when making 18A donation. Number one, a donor must make sure that every time when they make a donation, this donation is made to an institution that is approved for Section 18A purposes. And this can be checked on the SARS website as a list of all the approved Section 18A entities is uploaded on the SARS website and is updated on a continuous basis. When making a donation in kind or in cash to a Section 18A approved institution, the taxpayer is entitled to a deduction from the taxable income at the end of the financial year when they file their personal income tax. But this only can benefit them if the donation made does not exceed 10% of the total income of the taxpayer calculated before allowing any deduction. But you must also note that a rollover provision provides for additional amounts to be claimed in subsequent period or subsequent financial year, wherein, or in cases wherein your total donation for that particular year was not allowed in full. It is important for donors to ensure that donations must be supported by the necessary receipt issued by institution, which need to meet certain legal requirements as prescribed by the law. Receipts that do not meet these legal requirements will be disallowed immediately in the hands of the taxpayer claiming it. And receipt supporting documents submitted must be available upon request by SARS during verification or audit processes. So a donor must always make sure that they are issued with a proper or a legal supporting document after making a qualifying donation. And this will be issued by the receiving or approved organization. A donor must also make sure that they provide all their information to the institution or receiving institution when making this donation. And this is important when the receiving organization compiles or draft a Section 18A receipt for the donor in order for them to claim a tax deduction. And you must take note that donation cannot be claimed in any way without this tax deductible receipt. And when I say tax deductible receipt, I mean a valid, compliant one. We have had certain development in this space since earlier year. So prior to March 2023, we all know that all the organizations which hold the 18A status should issue a receipt that meets all the requirements for a valid 18A receipt. This is still the case to date. And previously, a submission of an annual income tax return and disclosure of Section 18A information, including numbers and value of all Section 18A receipt issued, is requested or was requested to be made by the taxpayer, but on a very manual basis. And also the taxpayer is also requested or required to make available upon request a list of all Section 18A receipt issued in a particular year of assessment, a process which is also manual or which was also very manual. As from the 1st of March 2023, the same rule still applies. However, an addition has been made. There is a pilot project of Section 18A third-party reporting in a form of an IT3D declaration, which is currently on a pilot stage, and early adopters or those who want to be put in that process early are welcome to come and submit their details in order for them to be piloted and be part of this important project. So this is our way, or is paving way for automation of submission of this 18A information. So as of May 2024, which is next year, this automation of 18A third-party reporting in the form of an IT3D will be fully functional and it will be rolled out. And all the receipt or information for all the issued receipt in a particular year of assessment must meet all the requirements of a valid receipt, including all the additional requirements that will be stated. And this information must be submitted on a regular interval electronically to SARS and indicating all the required information that is communicated or will be communicated at a later stage on the SARS website. And it must be on a prescribed format using the IT3D, which is available on e-filing for submission or on HTTPS or on Connect Direct. All the information relating to this process will be made available on the SARS website. So what are consequences for non-compliant with all these requirements? Impact of non-compliance with the 18A receipt. They negatively impact on the reputation of 18A approved PBO, not just your particular PBO, but all the PBO and the industry as a whole. They create difficulties in SARS when matching 18A data that they have to donor taxpayers, which will put additional additional requirements or additional burden to donors when they are selected for audit or for verification. And also it creates higher chances for donors to be flagged for verification or audit, which might discourage giving by donors. So now what are consequences for non-compliance with Section 18A requirements? For all the Section 18A approved entities, the consequences are as follows. Donations may be deemed to be taxable in the hands of any approved Section 18A entity if it fails to ensure that Section 18A funds were applied for objectives of the entity or applied for the purposes not covered by such objectives. If it issues or allows a receipt to be issued in respect of any fee payable to that entity, which is not determined or classified as a qualifying donation. For any ring-fenced Section 18A approvals, which has been applied for activities which falls under Part 1 of the 9th schedule of the Income Tax Act, which are non-qualifying activities. For conduit PBOs providing funds to both Part 1 and Part 2 PBAs, we all know that conduit should only provide funds to all the organizations which provide Part 2 public benefit activities and are approved themselves for Section 18A. For ring-fence Section 18A approvals and conduit PBOs providing funds for both Part 1 and Part 2 of PBAs, if they fail to retain or submit an audit certificate as required by the law. For any Section 18A approved Department of Government, if they fail to obtain and retain an audit certificate also as required by law. It must be noted that continuous act of non-compliance may lead to your Section 18A and tax-exempt status being revoked by SARS. So one must be careful when dealing with Section 18A requirements. So for donors, these are those claiming 18A receipt and invalid ones. This donation will immediately be disallowed by SARS when a claim is made. And in addition to that, appropriate enforcement measures may be taken, and such measures may include but not limited to the levying of understatement penalties on your assessment. So just to wrap up this presentation, some tips to give to the taxpayer. Section 18A receipt may only be issued once an institution has been approved by SARS for the purposes of Section 18A. So for any period that an organization has been exempt from income tax or has been in operation but not approved for Section 18A purposes, no receipt may be issued for any donation relating to any of those years. Section 18A approval is never granted also in retrospective. So that means that if you apply for Section 18A on a particular date and it is approved on a specific date, you may only issue Section 18A receipt for any donation received on that date you received approval or as per your approval letter. So no 18A receipt may be issued retrospectively. There are different types of Section 18A approval, as I have stated earlier, and each one has its own set of requirements. And any organization approved for Section 18A or holding this status must be fully aware of such requirements, and all those requirements are found on your approval letter. If you're not sure of any requirements or if there are any uncertainties that you have, you may consult us and we will advise accordingly. Donations must be paid or transferred during the year of assessment. So no 18A receipt may be issued for any promise for donation. So if a donor promises you a donation, you can only issue an 18A receipt once that promise has been satisfied. For as long as that promise has not been satisfied, or the money or the donation has not been received by your organization, no 18A may be issued to any of your donors who has promised to make such a donation but have not fulfilled such a promise. Section 18A donation can only be issued can only be used in carrying on any Section 18A public benefit activities in South Africa. So if you have received any qualifying donation for which 18A receipt has been issued, you cannot use such donations or transfer them out of the country or outside the borders of the Republic. An organization holding an 18A status must ensure that correct values are placed on Section 18A receipt for any donations which are made in kind or any properties. So it is very important to familiarize yourself with the method that I have stated earlier for valuing in-kind donations and properties. In conclusion, protecting the integrity of the Section 18A system is very important, and it's a responsibility that is charged on all of us. So we must prevent, all of us collectively, the issuing of 18A by non-qualifying PBOs, for non-qualifying public benefit activities, for incorrect donations such as fundraising events, service rendered, and other non-qualifying services, for incorrect valuation of in-kind donation such as trading stock, overstatement of donation deductions, and claiming of fictitious Section 18A by chance takers out there. So the reputation and integrity of this sector is priceless. So we cannot afford to have any bad reputation in this division or in this sector. So don't allow any shopping around by donors for best Section 18A deals. There should not be any deals in the first place. Report any unethical behavior. Don't wait until late or once you are caught by SARS to report such behavior. You must report as soon as you become aware of such. The loss of the misuse of this kind of benefit to this very important industry is not only to the fiscus, but to the broader sector, which is in dire need of funding, more especially in these tough economic conditions. So make it easier for donors to claim receipt without compromising risk and mitigations. And also be aware that new approaches which have been taken by SARS places a responsibility on both the donors and the issuing institution. So this is a collective effort which we must all take part in. Before I close, I would like to make you aware of certain important resources that we have as a segment. We have some guides which are available on the TI web page on the SARS website, which you can get freely by downloading them and going through them on your time to familiarize yourself and to empower yourself if you are in this industry and to gain invaluable information and education about tax exemption and 18A in particular. Some of the contact information that are important should you need any assistance or to get hold of us. We have an email address, which is ti segment@sars.gov.za, our webpage on the SARS website, which is the tax exempt institution, and also on our webpage, there is information on the IT3 data submission, which is a new process that will kickstart next year in May. But the pilot process, as I have alluded earlier, has begun. So if you want more information on how to get involved or just to bring yourself up to speed with this new process, you can go to our webpage and you will receive all the valuable information. Also remember to utilize or join us on our different digital channels. This is to make things easier for you. You can download the SARS Mobi app via your smartphone using your app store. You can register for e-filing using your computer. You can visit the SARS online website and lodge a query online without having to visit any SARS branch. And also, you can visit us on our different social media for important updates and some of the communication that is made continuously by the whole SARS and the tax-exempt institution. Thank you so much. And I'll now hand over to the program director. It was a pleasure being with you in this session, and I hope you have learned and gained valuable information. Thank you so much, program director.
Thank you very much, Lucky, for a very informative presentation. I hope our stakeholders, some of your questions has been cleared and the uncertainty on some information has also been cleared as well. We have come to our last part of the program, which will be our Q&A session that will be hosted by Roshni. Before Roshni starts, please note the following. If you experience load shedding during this webinar, note that the recording of the webinar will be posted on our SARS YouTube channel. All the presentation and the questions asked today will be posted there. We'll try our level best to answer as much as we can, but if we don't get to your question, don't worry, the question will be posted as well on our webpage. Roshni will be next for our Q&A session. Together with our expert, we'll be answering your question. Roshni has been with SARS for 16 years, the last 4 years of which she has spent in stakeholder engagement, communication, and education. She served as a project manager for several tax and custom modernization initiatives, as well as the new Custom Acts program. From 2019 to 2020, Roshni was a member of SARS private sector stakeholder relation team with a focus on the relationship between SARS and Customs Association. She joined Tax Exemption Institution segment in 2020 as a specialist for internal and external stakeholder engagement, communication, and education. Roshni holds a BCom in Communication Management and a BCom Honors in Communication Management from University of Pretoria. In addition to a number of project management certificates, including the PMBOK project methodology. Roshni, over to you.
Thank you, Madam Program Director. It is indeed a privilege to be part of the webinar, which seeks to support the needs of this very important sector of our country, tax-exempt institutions, and specifically Section 18A approved organizations. Ladies and gentlemen, good evening. We once again thank you for your questions. We have received a number of questions, and we will either answer questions in the chat or during this questions and answer session. Your questions do assist us to test if we are providing enough clarity of your tax obligations as per our strategic objective 1. Your questions also assist us to improve our processes and your taxpayer experience, as we are committed to making it easy for all taxpayers and traders to comply with their tax obligations. Ladies and gentlemen, as the program director indicated, I'm here to facilitate the question and answer session. I'm not here alone. I do have a panel of experts with me. Team, I'm going to ask you to please switch on your video when I call your name. Our panel of experts are Goloko Skosana, Manager Planning and Advisory, Tax Exempt Institution Segment. Welcome, Goloko. Kutso Manamela, Manager, Compliance Tax Exempt Institution Segment. Welcome, Kutso. Noluntu Mwabe, Specialist, Corporate Legal, Tax Exemption Unit based in Gauteng North. Welcome, Noluntu. And last but definitely not least, Estelle van Wijl, Operational Specialist, Interpretive Tax Leveraged Legal Products. Welcome, Estelle. And with that, I will go into our first question. This question is for Estelle. Currently, we can issue a compliant receipt without the income tax number of the donor. But is that likely to change over time? Estelle, over to you.
Good evening, participants. Thank you for the question. Yes, that's correct. Currently, a Section 18A receipt can be issued without the income tax reference number of the donor taxpayer, but this might become in future mandatory because the purpose of third-party reporting is for SARS to match the Section 18A receipt issued by the Section 18A approved institution to the donor taxpayer's income tax return.
Thank you for that very informative answer, Estelle. Very much appreciated. This question is for Kutso. Kutso, does it have to be a specific person from the NPO who is able to issue the Section 18A certificate?
Good evening. Thank you for the question, Roshni. Yes, it needs to be a specific person that issues the Section 18A receipt. For a person to issue a Section 18A receipt should have accepted fiduciary responsibility for the funds of the approved PBO. As an example, if it's for a company or an NPC, it would be a director in that company. If it's a trust, it will be a trustee. If it's a voluntary association or an association of person, we would have an office bearer. And then if it's an NPO, we would have a representative taxpayer issuing those receipts.
Thank you for that answer, Kutso. The next question goes to Holoko. Holoko, can a small donation be captured on a monthly basis?
Good evening, ladies and gentlemen. Thank you for the question, Roshni. Yes, Section 18A approved organization may capture the donation on its own records on a monthly basis, and then the total of the donations may be added up and put into one receipt at the end of the financial year, and only one receipt to be issued. And then there's no prescription to the amount in terms of the Income Tax Act that can be captured or received as a donation.
Thank you, Holoko. Our next question goes to Nuluntu. Nuluntu, is it acceptable for a PBO to say they only issue Section 18A for amounts more than 100 Rand?
Thank you, Roshni. Good evening, everyone. It's not acceptable as they cannot prescribe, nor should there be any conditions attached or ascribed voluntarily, as it is given voluntarily without any expectation. So they should not prescribe as to how much they can only issue, nor should the receiving party prescribe how much they should be receiving. Thank you.
Thank you, Noluntu. Estelle, are all the receipts required to contain all of the information as presented by Lucky?
Yes, that's correct. Unfortunately, a donor taxpayer will only be allowed to claim a deduction from his taxable income if the Section 18A receipt issued by the Section 18A approved institution contains all the information that's required by legislation.
Thank you, Estelle. Which leads me to the next question. Estelle, but how do you then deal with taxpayers who want to be anonymous?
Unfortunately, the type of information that must appear on the Section 18A receipt doesn't allow for, well, an organization can accept anonymous donation. However, they won't be able to issue a tax Section 18A receipt because the information that's required on the receipt won't be available to them, such as the name of the donor or the income tax reference number or the other personal particulars that's required for a donor to claim a deduction.
Thank you, Estelle, and thank you for clarifying that. Luluntu, as we saw, Lucky presented on non-qualifying donations. However, could you please elaborate on the professional skills donated? For example, if a doctor donates his services to a Section 18A organization, is that deemed a qualifying or non-qualifying donation?
Thank you, Roshni. As stated, as correctly stated, an offering or donation, inverted commas, of service will not qualify as a donation. If we look at our guide, it's also contained in our basic guide to the Section A approval, also the tax exemption guide for public benefit organizations, which is available on our website, which has also been shared on this webinar and under the question Q&A. So donations of service such as time or skill, or a doctor who wants to donate their services to a patient will not qualify as a deduction for purposes of Section 18A, because a service is not a donation of property or a donation that's considered as a donation in kind. Thank you.
Thank you very much, Noluntu. And good, so while we're on the topic of qualifying and non-qualifying donations, can you issue a Section 18A receipt for school fees? And I know Lucky touched on this, but I'm sure you can elaborate a bit more for our dear listeners.
Thank you, Rajni, for the question. No, school fees, it's not a qualifying donation for Section 18A purposes. School fees are not given voluntarily or out of the generosity of the donor. It's actually a responsibility by the donor for the purposes of maintaining their children. So basically, based on SARS policy, amounts that are paid for school fees or levies or entrance fees and that are paid by parents to their children or any other connected person, if you're taking care of your sister's child or your brother's child, if you're paying that type of tuition to an educational institution, that will not be regarded as a donation, and it does not qualify for a section for you to be issued a Section 18A tax deductible receipt.
Thank you very much, Kutso. Thank you for that clarity and certainty that you've provided. Holoko, what will happen if an organization has issued a Section 18A receipt and the donor requests its funding back? I repeat that. What will happen if an organization issued a Section 18A receipt and the donor requests its funding back?
Thank you for the question, Roj. The donor is entitled to revoke their donation that they made if the project or the donation is not being used for the purposes, for its intended purposes. For example, if a project has not been delivered according to the promised standards, they are entitled to do that. And the Section 18 approved institution has got an obligation to withdraw that donation and inform SARS so that the donation cannot be claimed. The donor will also not be entitled to the deduction of that donation because the donation has been revoked and the Section 18A receipt has been recalled.
Thank you, Holoko. Estelle, may a receipt be issued to a corporate that is making a donation in order to receive BEE points and for which the BEE auditor may require specific information from the PBO to confirm who the recipient of the donation was?
This might be a bit technical question and might need further information. But generally, the giving of a donation, which results in the corporate receiving BBE points, is not excluded from the definition of a donation. A donor taxpayer might and is well in its right to request a Section 18A approved organization to provide feedback or information on the usage of a donation to ensure that the donation was used for the purposes intended. As Koloko mentioned, the reasons why a donation may be revoked is one that if the donation is not used for the intended purposes.
Thank you, Estelle. Noluntu, and we keep getting this question. How long does the application process take for, number one, registration for income tax, application for tax exemption, and Section 18A approval?
Good evening, taxpayers. So registration for income tax is mandatory in this instance where you would want him to operate as a public benefit organization. That can be done anywhere at any branch, and that can be immediate. It can also be done simultaneously with your application for exemption as a public benefit organization. So the application, that's question number one. So the application for tax exemption as a public benefit organization or in other related exempt entity is 31 days in the event that we receive a complete application. What I mean by complete application is where all the documents that are required are submitted, your returns have been submitted, and there are no outstanding issues that are required or raised. A checklist is found on the SARS website that outlines all the information needed. So before you even come to apply for exemption, you may use that checklist to make sure that you've got all the requisite information and all required documents. And then in the instance that the application is not complete and there's further required information, we can take up to 57 working days to finalize that application. And then with regards to just an application for Section 18A, this is in the event that the entity is already approved as a public benefit organization. They already have tax exempt status, and they want to amend they've amended the activities or added activities that may qualify for Section 18A. In that regards, the application time, turnaround time is 21 days. That also depends on all the required information being submitted. That would be your financials, your motivation, your signed amended MOI or constitution or trust deed. Thank you.
Thank you, Noluntu. I'm sure a lot of our taxpayers now know with certainty and clarity how long they're supposed to wait before they receive their feedback from SARS. Good soul. What does SARS mean with an audit certificate that needs to be issued for ring-fenced activities? So what does SARS mean with an audit certificate that needs to be issued for ring-fenced activities?
Okay. For a ring-fenced Section 18A approved organization, how does it come about? When an entity conducts both Part 1 and Part 2 activities of the 9th schedule, we do know that Section 18A tax deductible receipt should only be utilized for Part 2 activities. So if an entity conducts both Part 1 and Part 2 activities, that entity will be granted what we call the ring-fence Section 18A. The ring-fencing is particularly for activities that will be for Part 2 activities, solely for Part 2 activities. If you're conducting Part 1 activities, you cannot issue Section 18A receipt. So the ring-fencing, we ring-fencing the Part 2 activities. So what does this concept mean? It means that when you issue donations, you have an additional responsibility to have proper records, so that your records, you can be able to control the manner in which the public benefit activities that are conducted in Part 2, you can actually account for that I've received 500 rands and then I've issued Section 18A tax deductible receipt for that 500 rands, and that amount should be utilized for Part 2 activities. If you're receiving funds for Part 1 activities, you cannot issue the Section 18A receipt for that. So as an additional requirement, there need to be an independent person that can review your records and then quantify and issue a certificate to ensure that you have utilized the funds for Part 2 activities. Thank you.
Thank you, Kutso. Estelle, would you like to add?
Yes, I'd just like to add for further clarity, there is an interpretation note available on the SARS website, interpretation note 112, which specifically deals with the audit certificate for Section 18A purposes.
Thank you for that additional information, Estelle. And thank you, Kutso, for your very detailed answer. Goloko, must a PPO issue a receipt upon receiving an invoice from a company for an in-kind donation, even if they are not comfortable with the value being presented for the in-kind donation?
Well, Rod, I would assume that the invoice would be issued as an indication of the value that is to be placed on the Section 18A receipt to be issued by that organization. SARS does not have any reservations to that. However, it needs to be taken into account that the income tax provides a specific formula to calculate the value of the donation of any property in kind to determine the value that is to be paid on the receipt. Our tax exemption, the tax exemption guide for public benefit organization in South Africa, as well as the guide for tax deductible donations, also provide guidelines in this regard, detailed guidelines. So the burden of proof of the value to be placed on a Section 18A receipt is both on the organization receiving the donation and the donor taxpayer that will be claiming the deduction. The amount that has been determined by the donor taxpayer, or the amount that's paid the invoice, and ultimately to be reflected on the Section 18A receipt, may be verified or audited on assessment when the donor taxpayer claims such a deduction from his or her taxable income.
Thank you for that, Goloko. And as we're on the topic of in-kind donations, how does an organization value an in-kind donation of food items donated that may be expiring soon?
As we have already mentioned, and the speaker has already mentioned, regarding the valuation of the donation of goods made in kind, it is actually to be based on the fair market value on the date of the donation of the property or the trading stock, the food items, or the cost to the donor taxpayer of such food items on the date of that donation. So it can be reasonably expected that the food items that are about to expire would have a fair market value, which is far lower than the cost to the donor of the taxpayer, to the donor taxpayer. So it means that the fair market value would have to be relied on, and an honest introspection would have to be conducted by the donor taxpayer to establish the fair market value of those goods and the value of the food items to be placed on a Section 18A receipts. Bearing in mind that the values that will be placed, as previously indicated, will be audited by SARS, because we all know food that is about to expire is not cannot be valued the same as food that is not about to expire. So it requires both the donor taxpayer and the donee to work together to come to a reasonable amount at the time of the donation that can be placed on the value of the receipt. If the food does not have any value, it should, Section 18A receipt should not be issued because there's no value to be placed on the receipt.
Thank you, Kholoko. Okay, for Noluntu, may a PBO claim a Section 18A receipt itself for making a donation to another PBO? Thank you, Noluntu.
Oh, thank you. Sorry. Yes, Roshni, PBO may do so. And obviously, the legislative requirements must be in place. The donation requirements must be met. And the PBO, most importantly, to which the donation is made, must be an approved Section 18A a PBO. So the normal rules apply. The fact that it's another PBO making a donation to another PBO is not really different. Must be an approved PBO and the Section 18A requirements must be met. Thank you.
Thank you, Noluntu. Good. So, can any government department issue a Section 18A receipt in terms of Section 18AC?
Yes, a government department can issue Section 18A receipt on condition that government department falls within the spheres of government, as we know them, the national, the provincial, or the local sphere, as contemplated in terms of Section 10(1)A of the Income Tax Act. That particular government department needs to be approved by SARS in terms of Section 18A(1)C, as you've correctly stated on the question, Roshni. And then the donation for which Section 18A receipts are issued should be for the purpose of public benefit activities in Part 2 of the 9th schedule. So yes, government can issue when they have approval from SARS to do that, and it's within the spheres of government. Thank you.
Thank you, Kutso. Thank you, panelists, for your detailed and informative answers. Greatly appreciated. You may continue to send your questions on the platform or via Section 18A questions@sars.gov.za. Please note, this email address is only for webinar-related questions and will be closed immediately after this session. For any service escalations, please visit our website. Your questions are important to us as they help us to build our frequently asked questions. Please note that SARS has a dedicated webpage for tax-exempt institutions where you can easily find information to assist with your tax obligations. Program Director, I hand back to you.
Thank you very much, Roshni and team, for prompt response to questions. If your question has not been answered, please be on the lookout on our frequent asked question on the website. Ladies and gentlemen, we have come to the end of our webinar. I would like to thank each and every one of you for their time and participation. I hope the webinar has met your expectation. Before we close, I would like to thank the speakers, the panelists, organizers, and the IT team for your contribution to this webinar. Remember, the presentation will be placed on our website and the recorded webinar will be available on the SARS YouTube channel. Please don't forget to follow us on our social media platform, our Facebook, YouTube, Twitter, and LinkedIn. As soon as you leave this webinar, you will be prompted to complete a survey. Please complete as much information as you can. We really appreciate hearing from you. do not forget the email address that we've given you, section 18A, questions@sars.gov.za, will be closed at the end of this webinar. Please participate before the end of the webinar, before we close it off, if we have not answered your question. If we've not answered your question as well by the end of the webinar, the email address will be available on the presentations that will be placed on our website. From me, Mashadi Mutwa, good night.
All your years of paying tax, thank you for every life you saved and every risk you braved. When you saw our healthcare workers on the front lines battling COVID, you rose to the occasion and gave them the tools to save lives. Without your tax compliance, we wouldn't be able to fight a good fight. When you saw our vulnerable communities, you provided for them. To all taxpayers and traders, thank you. Continue to pay your tax. Your tax matters.